Let's turn back to the major indexes. Joining me now is Michelle Schneider, partner and director of trading research and education for MarketGauge.com. Michelle, it's always good to see you. This sell-off that we saw into the close, what do you make of that? Why did we sell off so significantly into the market close?
Well, there's quite a few factors, actually. Number one is, even as we've popped over the last several days, the Russell 2000 and the NASDAQ 100 have not been able to get back over their 50-day moving averages. So at this point, we could actually just say that even though the SPY and the Diamonds held up, the other two very important indices just rallied to resistance. That's number one. Number two is the inflation narrative is still out there, even though things have calmed down a little bit. And there's been some rotation out of wood, let's say. But there's still a lot of money going into commodities here. And the situation hasn't really changed. And then the yields went up a little bit while the dollar drops. These are really big concerns for the market right now as well. So finally, junk bonds, which I think is really probably one of the best secret indicators to look for risk on or risk off, actually at the end of the day broke its 50-day moving average if you're looking at the symbol JNK. And that's been what I like to call the Fed's playground. So if they're starting to do any kind of tapering, that's probably where you'll see it first. And if that happens, of course, then we're looking at a potential much bigger sell-off other than the 10% correction we just recently popped from.
Mm-hmm. So what is this signal? I mean, it sounds like, Michelle, that potentially more selling could be on the docket based on the indicators that you're following.
Definitely. It wouldn't surprise me, especially basically when markets correct 10%, that is a normal number for a correction. 59% of corrections are about 10%. So we just had a 10% correction, particularly, as I said, in the Russells and NASDAQ. So the fact that they've bounced from there is a good thing. But if we can't get over those hurdles and we break down under recent lows or under a 10% correction, then I do believe we can see a 15 or 20% correction very easily. The market is not necessarily optimistic at this point, not optimistic about the infrastructure package that you mentioned at the top of the show, not optimistic about the Fed being able to control inflation. So it would be what could change the narrative here to push everything forward. And at this point now, we need something fresh to be looking at.
Mm-hmm. I think that is a good point. I mean, we're going to get retail earnings throughout this week and certainly for the first 3 months of the year based on the indications that we've received so far from Walmart and Macy's this morning. It was better than expected, and they are confident that things are going to improve throughout the rest of the year. Both of those companies upping their guidance, and certainly Walmart closing with some nice gains today. When you talk about a next catalyst, Michelle, is it a comment from the Fed? Is it one data point that you're watching? Could be another month before we get those consumer and producer price index numbers, right, that do mirror inflation. When could this catalyst come, and what might it be?
Well, my best hope has really been the infrastructure plan because it would be very optimistic on all levels. It would certainly mean that there's some kind of bipartisan agreement if we can get something done. So from a political standpoint, it would give people relief that there's some working across the aisles. If you're also looking at the infrastructure package in terms of job growth, it would actually create some new jobs. And also, I think it would just be good for the overall morale of the country to know that we're going to be working on bridges and roads and tunnels and airports and even 5G network, which is probably, to me, one of the more exciting areas that if we can get that going will help. The United States is right now a little bit behind. We're certainly behind in infrastructure if you look around the world, and we need something in this country to be unifying. The pandemic growth can only go so far, and that's been my biggest concern, is that we might be heading into a stagflation environment where the economy starts to stagnate after we've come back, and yet the commodity prices continue to rise because of some of the real shortages that we've had.
Mm-hmm. Yeah, and these shortages, I think, unfortunately, for commodities might be temporary in the case of gas because we see the Colonial Pipeline back on the market. But I think of other shortages in this market, like semiconductors, and forecasts that we've seen that could last, that shortage, until at least 2023, shaving hundreds of billions of dollars just off the auto industry this year alone. And so I think that's another factor definitely that investors have been paying attention to. I want to get your take on Take-Two Interactive, a gaming company that is going to report its results after the close. The stock has not been faring so hot lately. Of course, as this reopen does pick up more steam. What are you expecting from Take-Two, and what do you think about the company right now?
Well, it actually has a lot of support here if you look at a chart just at around 160, which it's bounced off from. But when I did some research into the company itself, well, first of all, the whole video gaming sector has been hot really for a very, very long time. If you want to look at some of the more recent mega trends, you can really go back to the early 2000s when video gaming really came on the scene with companies like Electronic Arts and Take-Two. So now, right now, what I've read is one of the reasons why that company in particular has been under pressure is because they've actually spent money on themselves, on developing some more products, on research. And when a company does that, of course, what it does is it affects the bottom line. Not necessarily going forward, but certainly for the next quarter or maybe two. We've seen other companies do that. So in this case, if they don't experience sizable growth right away and the earnings don't come out well, this under 160 level would be concerning to me, and I would probably stay away from the stock. If we come out with a surprise, because as you know, Chris, it's always going to be the reaction to the earnings and not the earnings themselves. If the reaction is good and they think the worst is over for that stock through 180, I think you'll have a really good opportunity to see it maybe go to 200 up to about 210.
Okay, Michelle, as the masks come off, right, we're going to show our faces again. We're going to be out there. I think a lot of people are excited to do that if they haven't been out there already. Of course, as some of these restrictions ease, certain stocks, certain trends that you're watching broadly in this reopen space that you think could benefit.
I'm so glad you asked me that question, Kristen, because lipstick has been on my mind. Now, you and I have been wearing lipstick, obviously, because we're on camera a lot. But if you've been under a mask for the last year and a half and you are finally going to be maskless, then you're going to be looking at your face and going, wow, I better start wearing more makeup. I better start wearing some lipstick. Even men will probably be looking more at facial products. So I would say any company related to that. So I'm looking at Estee Lauder. I'm looking at Ulta, which doesn't report earnings till the end of this month. Those two in particular have my interest as makeup companies. I also think that apart from the mask thing is I'm thinking a lot about pets, because they're going to be left alone again. So if you were a pet owner knowing you're saying goodbye to your dog after you've been home all the time for 8 hours or whatever, what are you going to do? You're going to go to Petco, which reports, by the way, this week, which is Wolf, or you're going to go to Chewy, and you're going to start trying to compensate, leaving your dog more treats, more food, more toys, etc. So those really two areas have my attention right now.
All right, very clever, Michelle. I will wait to see how those lipstick and pet sales play out from now. I will be watching for sure.